day all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we're now at the 30th of July, 2019, just around 4:05 p.m. Central Daylight Time. Another down day in the grains, and it's not surprising. Remember, you go through stages in grain markets. The first stage is, can you get the crops planted? Oh boy, that becomes a big event. This is one of those few years where they really got hurt on the planting. Then you get into the growing season, where we're at right now, and things typically look good, and then you start worrying, are the yields going to pick up? What's going on? Or you're worried that maybe the growing season isn't going as good as you think. In this particular year, it's probably going as good as you would want it to look. Then we get to the end of the August time frame. Remember, we're still in July right now. And then you start worrying, well, what does the crop really look like? And you're out in the field, people are scouting it, and they're all guessing where you're going to go. And of course, then you worry about, can you get the crops in? So there's different phases that you go through. And believe me, there's a reason I've got this gray everywhere, and it's because I've seen this happen over and over. So what grains are doing now is we're in the growing part. So the market rallied sharply because we had seen floods, rains, and so on, acreage loss, prevent planting. There was so much going on. Now we're in the correction phase. The other part that's going on is the trade with the U.S. and China. You know that is still a rough issue. Today we saw many of the markets, including the copper market, get hit pretty hard, including other markets that like the cotton and so on that got hit on that, because the president is saying maybe the Chinese want to just wait and see who's going to be the next president before they make a deal, which even before the trade negotiations end, sort of takes the air out of the market to a certain degree. Just bringing up the points, and that's how I'm seeing them. In looking at the grains, you can see a further correction. I told you that I thought that corn might make a run and try to fill a gap, and it certainly has done it. It did not find a lot of stops under that part of the market once it filled it, but it was still down 6 cents, no bounce in the market. In the weekly area chart of soybeans, you might be headed back into this 871 zone or even lower. The question is, how much pressure do you want to put on these crops as we get ready for the acreage report on August 12th? And it's unusual we get another acreage report, but the trade simply did not think the government was correct on its acreage numbers due to the floods and rains that we got. I think it was back in June. So they did another survey. We'll see that. Will we get additional acreage put in the beans for late planting? We don't know. But the market is gradually working itself down. On the daily bar chart, I drew for you a chart line that shows where the market is right now. And you can almost take it and put a line right through here at the 890 level. And what could be happening is this market, if it starts breaking down, breaks through that number or has to come up through one of these lines to prove that it's good. The problem is the beans are not looking good. And you've got a downtrend. You have a clear pattern of lower highs, lower lows. That's bearish. In order to negate that, you've got to get this market back up over 909 to take that last high out. As we talked when I got back from my vacation, the resistance has been the 100-day and the 18-day average of closes. That's held, and now the market is breaking down from there. Where could it go? Well, the logical first spot is, if it wants to pursue further lower prices, the lower Bollinger Band. In the past, when you hit a low band or a high band, it's not atypical for the beans to get some money coming off the table. So those that were bold enough and have held this market into the downtrend, that could be their reward number. When you look at momentum, we're oversold. So I would not be surprised at all to see the lower Bollinger Band hit, some short covering take place in that number due to it being oversold, but that is not a change of trend. The trend is still down. In the meal market, you've got the lower highs, lower lows. Today even confirmed that we have that lower and low. Where did the market go? It went right to the lower Bollinger Band. Again, it's about the second time in 3 days or so. But the market here is a little different than beans. What it's doing is the momentum has both numbers under 20 today. It had both numbers under 20 yesterday and the day before. So unlike beans, it's not oversold. Until the red line closes back over 20, I say that the bears have grabbed control even down here, and they're trying to push that market to see how much further they can take it down. To lose this downside, the red line on the slow stochastic needs to close over 20. Until that occurs, I expect to see sellers stepping up to the table on rallies. In the soy oil, I was looking for the market to have some resistance initially at the Bollinger Band. It then fell back, fought as of yesterday the 100-day average is some support, but if it took out this low, which it did today, puts the market in the middle of no man's land. You're still bordered by the upper Bollinger Band, the lower band. I think you can see how that has worked out overall, and you've been drifting sort of sideways. As I've repeatedly said, this is really, if you think of a dog, the tail. It just gets whipped around as the crush determines, do people want the meal, the beans, what are they trying to do? And because of where we're at in oil, it's not the leader of the market. It's the beans and the meal right now. In the corn market, the market came down, filled the gap that I was talking in that 420 area, which puts into play the possibility that we either get down to the lower band or the 100-day average. Will there be a lot of downside from there? Well, I'm not telling you that because I don't know. But what I would expect is no. I would expect the market to find some support in that general area in the marketplace due to the fact that it's just come from over the 460 area all the way down here, and that would be the first test, if it can get there, of the Bollinger Band. Last time we got to that number, we held. There's no magic to that. It could be that the market pursues even lower prices, and that could happen. And is the trend down? It is down. What about the embedded reading? Is it embedded? Well, today both numbers were under 20, as you can see. Yesterday both under 20, and the day before. So like the meal market, we have embedded readings, which until the red line gets back over the 20 level, means to me at least, that on rallies I would expect to see sellers step to the table. I'm also expecting this area to offer some support. Doesn't mean it has to, but that's my expectation. In the meal market, the 18-day average is now stymieing the rally. It's holding things back. We do have a pattern of higher lows, but I could also argue in some manner we've got lower highs here, and we've just run into neutral territory. Now, one of the reasons that corn seems to be having problems is you can substitute in certain parts of the country, especially lower grain wheat, for corn feed. So that's going on. I was asking our staff today what's happening in that, and they were explaining it to me, what they're seeing in the cash markets. But that's the cash markets. It's a futures contract. That's the resistance. The market's pretty much in no man's land. You've got the swing line up at the bias down, and the market is correcting an oversold condition. It is still in it because one of the numbers that are slow stochastic is still under 20, while the other's at the 30 level. In the sugar market, the market had a pop rally that didn't hold all that well. I'm not saying the trend isn't up. It is. You have the pattern of higher lows, higher highs. Until you take out 1193, momentum is up. Bias is up because you're over the 18-day average, and the trend is up. Take out 1192, you neutralize the market again. What happens if the market goes up from here? Well, if it decides to lift, you have two levels of resistance, 1259 to 1264. In the coffee market, we have a downtrend still in place. Lower highs, lower lows. Now, the battleground began back here at the 100-day average in the lower Bollinger Band, and you've been whipping pretty good back and forth in that area. You've also got the embedded reading, which is very bearish unless you get the red line of the slow stochastic back over 20. Until that occurs, I would expect on rallies you're still going to see the shorts show up and try to defend the position. Now, another element that could happen here, and you've got to just keep it in the back of your mind, in Brazil, they're due to release a tax reform bill of some type. When that comes out, what it does to the real will, in a good part, impact coffee. Now, whether it's the Separatist coffee that it's going to impact, we'll see. But we're seeing that there are things going on there, and often the way their currency goes does impact the coffee to a degree. In the cocoa, we're still very much in a downtrend. Lower highs, lower lows. But if you come back to yesterday, it was your first challenge of the 100-day and the Bollinger Band, and you popped back today. That's all that you can say. This is a zone where I expect a churn to develop from. You're oversold, you've hit a downside target. In the cotton market, now the market 62.90 was taken out today. You hit 62.84. So this level of that short covering rally, and that's what I'll call it, ran into its problems, and it's still there at the 18-day average. I think the past 5 days in a row it's hit it. Is the market ready to start a downtrend or stall out? Don't know. I can just tell you what's going on with the chart action right there. You've stepped out of this correction mode, and now it's looking to see what it does next. In the cattle market, you're narrowing in these Bollinger Bands. I know I said that yesterday. I'm saying it today. Very important is the fact that the market, when it reopens tomorrow, will be out of an overbought condition. So I would not be surprised that when that occurs, if you're assuming you're down, what will happen is some support might, word is might, not will, might show up at the lower Bollinger Band with resistance back at the 18-day average of closes. The better looking market is the feeder cattle. It's got the, if you take a look, it's held the 18-day average. It has higher lows now, higher high. It's coming into resistance at the upper Bollinger Band at 145.32. Didn't quite get there today, but that is the resistance between that number up to the 100-day average of closes. Now, what about this slow stochastic reading? Both numbers are over 80, so it's the flip-flop of what we had in the grains. They're both over 80 yesterday, but what about the day before? They were. I didn't think they were. They were. Therefore, you have the embedded reading here, too. And that embedded reading, in theory, means, to me at least, until the red line closes back under 80, I'm looking for on breaks, the market to find support. Lose that number, and you start waffling again. In the hog market, well, I think what you saw is a limit down yesterday. Today, down another 245 points. I think the market is saying disappointment again from the short covering rally, hoping that there would be something resolved on trade issue in terms of possibly China buying U.S. pork, grains, and from what the president sounds like, it's not sounding that way. We are going to get a trade report tomorrow from Steve Mnuchin and Robert Lighthizer, but they rarely come out and say, no, there's no progress. They say, yes, we had a constructive meeting. You know the game. You've been through it now for a long time. But the market is telling you what's going on, and it's not looking at anything positive at this point. It can always be surprised, but the trend down, bias down, momentum down. I look for the market to have resistance now on rallies at the 18-day average of closes. You put it all together, an interesting day. Apple's earnings came out actually quite good. The market was up about 4.5% after market. You know, one of the things that I look at during the day, especially when you get into markets that are coming into Bollinger Band bottoms and or the 100-day average, is what does a pivot point look like? And you might say, what is a pivot point, Ira? Well, think of it this way. You take the previous high, low, and the close, you divide them up, and then there's a formula where you subtract one part from the other to come up with what's called a center line, which is the pivot line. Then you're looking at resistance points off of the previous day's range and support points. I do not think pivot points carry from day to day. I think they do a better job of intraday, especially in markets that have some volatility and build momentum. Ideally, I look at pivot points when I'm seeing what I just showed you. Markets oversold, markets overbought, coming into key areas. What's that pivot look like? It's another tool. How do you use it? Well, that's going to be the important thing. Because I created 3 videos. One of them ties together momentum as I define it with the slow stochastic, then the pivots, how to apply it on your charts. And just about every good charting software program I know of, the more advanced ones, carries this formula in it. Some Forex traders, by the way, go beyond 2 resistance points and 2 support. They'll carry it out to 3, 4, or 5. There's ways to work with that. But to find out more, either call us or go to our website. On our website, you'll see the free offerings we have. Just click on any of them. You can take it from there. To get to that page, if you're watching me on YouTube, you can also click it here. One other thing. I've heard from some people that you might think this is a little blurry what we're doing. I don't think it is. I've checked it on monitor after monitor. But if you think it is, let us know. We'd like to know if that's the case. I'm Ira Epstein. You have a good day. I'll see you tomorrow.